Okay, hey guys, so now we're looking at the Great Britain Pound USD, okay? And again, this is a very parabolic move. I mean, look at the size of these candles. This has just been a massive move up. And the thing is, we're getting very far away from the 200 moving average. Now, no matter how far this thing gets, eventually it has to come back down and touch base, right? These are like magnets. It can't run away forever. It has to come back down. Our whole thing is knowing when to time it right so that we can catch it when it's moving down, okay? So at this point, it's still not a clear enough indication, at least not on the 4-hour chart, about when this is going to come down, okay? It's still not clear enough yet. We haven't seen any white candles yet, and we started to move into overbought territory down here, but once again, it's only 75. There's still more room that it could go up some more. Let's zoom out to see what we're looking at. I mean, okay, so zooming out at the big picture, right, we could go back as high as this to test out the previous high. Does it mean we're going to go there? It does not mean that yet. That's why we kind of have to watch and see what's happening. We let the market show us what it wants to do, and then we get in on that trade and ride the momentum, whether it decides to move up or whether it decides to move down. Okay, so like I said, at this point, it's just not an attractive time, in my opinion, to get into a trade right now, not on this pair. If I try looking at a smaller time frame, once again, super parabolic move. I mean, there's no doubt that this thing has to come down and cool down. But one of the biggest mistakes you can make is just saying, yep, it's going to be time for it to come down, and then it'll shoot up like another 50 to 100 pips and take you out of your stop loss, right? That's how Forex is. I mean, especially when we have the big banks and stuff like that. When they start to place a significant buy order or something like that, I mean, that can literally just make any currency pair go ballistic, right? So, again, it's still the fact that we're up here, and we've been up here for a little while now. We've been up here for... according to this, maybe 7 hours. We've been in overbought territory on the 1-hour time frame. It says that it needs to come down to cool off a bit. It does say that. Does that mean it's going to happen right now? I'm not completely convinced. But here's the thing now. So if you want to get into a trade and you want to try a trade out, this is why I always advise, you trade with small lot sizes first until you get to really get a good feel for what's happening, right? The only thing that will get you used to this is if you keep doing it. That's the only thing. Now, what I could do here, because this has been enormous resistance, if you want to try to take a trade, then just take your stop loss just above here, right? This is less than 100 pips. I mean, on the 1-hour time frame, that's not bad. To say 10 pips, sorry. Right? 4295. Yeah, we're talking about 10 pips. So if you were to get into, let's say we said, okay, look, we're looking for at least a short-term reversal because we've been in overbought territory for quite some time, then it's not that risky of a trade to get into a sell order right now, and you put your stop loss right here, only 10 pips away. So you're minimizing your losses if if the trade doesn't actually materialize the way you expect it to. Where would we look for it to come down based on being overbought? I would look for it to come down somewhere here, maybe initially about right here, because if we look at this candle, we see that there was selling pressure right here. We see that there is buying and selling pressure right here along this line. So this might be the first major point of support if it was coming back down. The next point would be right around here, obviously, because we can see where these candles were stopped or supported right here in this area. So, we'd look for a cool down, I think initially, at least to down here, then down here, then down here. Okay, so that's what we're looking for. But once again, any trade in Forex is a risk. Your whole thing is you want to minimize your risk every time you take a trade. So if you want to, like I said, if you want to try to take a sell order right here, then you just put a stop loss just right above here, only 10 pips away, call it 10 pips away. So you minimize your losses. In terms of your risk, it's not really a high risk trade. And then you would look to, I'd say, take profit maybe somewhere down here, which is about 40 pips. Okay, this is about 25 or so, about 40 pips down here. Okay, so that's the kind of thing that you're looking at in those types of scenarios. Again, you want to try your trend lines. So if I go again to objects and I draw a trend line here and say, look, this thing has been going parabolic since down here. Oops, let's see, let me try to fix this right here. So if I'm drawing a trend line just based on that, okay, so this trend line has basically supported this parabolic move, as you can see right here and right here. So we could look at right around, somewhere around here, in terms of it interacting with that trend line again. Okay, so if you're taking out a sell order, maybe the first take profit point would be right around here, because we have not yet broken this trend line, right? Everything, Forex, everything is trend lines. It's always about finding a trend, identifying a trend, and seeing, okay, what's going to happen here. But what we would be tempted to do is when it comes and hits this trend line again, right, you'd be tempted then technically to put in a buy order at that point, because so far every time we've hit that trend line, we've gone up. So until we break through this trend line and come back up and get rejected on this trend line, that will signal a further move down. Okay, so once again, that's how you identify the trends, and this is also how you can identify good entry and exit points as well.